Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about GBPNZD because at the moment we do have quite interesting price action and structure. Now, starting here on the monthly, we can see how the market has just tested and started to reject a very strong monthly support and demand area. In fact, from here the market started all this move to the upside, again here tested and rejected. At the moment we're testing once again this very strong support and demand, and we do expect the market to potentially reject this area to the upside. So on the monthly, everything seems pretty bullish. Dropping down on the weekly, what do we see? Now from a weekly perspective, we can see how we did have the creation of this huge M pattern. Now in general, after the creation of an M pattern, what you want to see is the market create a move to the upside, potentially all the way up to complete the pattern and the previous support turned resistance, which is the neckline of the pattern itself. So here on the weekly, we do expect a potential move higher. Now, generally speaking, if you have an impulse and you want to measure the correction, you do have to take your Fibonacci from the high to the low of the impulse, and the first upside target would be the 0.32 Fibonacci retracement. Now, in this case, if we look left, we can easily see how this 0.32 is currently lining up perfectly with the previous support and resistance, creating a first potential upside target that we do expect the market to provide a correction to before then potentially rejecting it to the downside. Dropping down on the daily, what do we see? Now here on the daily time frame, first of all, we can see how I did speak about GBPNZD a couple of days ago after the creation of this W. When the market was around this area, I explained all the reasons for which we did expect a rejection to the downside and completion of this W formation at the neckline, and then we wanted to see the start of the continuation to the upside. Now, at the moment, we can see that is exactly what the market did. The market first completed the pattern and currently it is rejecting it to the upside. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. However, at the moment, what we can see is that the market, in creating this move to the upside, is also breaking above a quite important structure level. In fact, this zone was acting as resistance, and at the moment, the market is breaking it to the upside. And what you know is that previous resistance, once it is broken to the upside, is turned support. Therefore, if the market will successfully manage to complete this impulse and provide a correction to this previous resistance turned support, this would be a very interesting area for a potential longing opportunity. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the pound, we can see how on the pound lately net positions have been decreased. We went from having 2.2k net positions to having a negative minus 40k net positions with 77k shorts and 35k longs. We can see that reflected also with the long-term bearish price action that we have seen so far. However, things are starting to change. We're seeing a shift from the creation of lower lows to the creation of higher lows, and we are now starting to see longs added. In fact, we see 5.2k longs added with the last report, indicating that a potential accumulation of longs could be quite near and probably already started. So if this impulse will be completed and then we will have the correction here, since we have strong liquidity, we could have even more accumulation of longs for the net positions to start growing again on the pound. And if we go and see what we have on the NZD, we can see how the NZD went from having a minus 14k net positioning to having a minus 1.5k net positioning, so obviously getting stronger, and we see that reflected with the market melting to the downside, as we already said. However, what we're starting to see here is a once again, net positions that are starting to get decreased. In fact, we went from minus 800 to minus 1.5k net positions, with longs closed and shorts opened from an institutional perspective on the NZD, showing that the NZD could once again start to get weaker. And a weakening NZD is exactly what we need if we are to create this continuation to the upside. Therefore, if the market will complete this impulse and then provide a correction here, how we could be approaching this specific situation. Now, as usual, we would have to be reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market, as we would have, to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we would have good probabilities for this potential move to the upside. Now, if you do know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description, and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.